We hit 4.616 and then dumped. And this is the level, this 2 bar, this support right here. I wouldn't be surprised if we get maybe a little bounce, but this is where I still see us falling into this blue line. So far this worked. Didn't work here. It needed the energy to get up and then crash through it. It really did work. TLT or whatever bond instrument you use is obviously supported. Stocks are not falling apart.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
So here's finally the bond bounce that, oh my God, I was waiting for so patiently. So this is the 10-year T-note futures, 2-year side by side. And I said, okay, this would be a nice area for a bounce. And I'm looking for this trend line. And we needed the energy to get there. So here's the 2-year, same thing. We kept making lower highs, et cetera, came down to almost the purple. That was my area. Did form a kind of double bottom, and then we had a gap. So you know this is going to fill at some point. So in the same way that this purple had to fill, et cetera, this is going to have to fill again. But right now, we're on our way to this kind of higher channel resistance level that seems at least more realistic to me. And then we've got the 10 and 2-year yield curve, which is on a weekly, on a daily, and you can see that this has really been frustrating for lots of folks that are playing this yield curve and don't have the benefit of this technical review, I swear. First and foremost, I am adamant that this is heading down to this negative, let's call it 0.60%, which is deeper inversion. I've written about this. So we did break down on a weekly. It took 11 days. Oh my God, it was so impressive. Then we had Monday, Memorial Day, the 27th. And then in 2 days, this completely retraced 11 days of this bear flattener. And remember, most are positioned for a bull steepener up here. Point is, it's back down to breaking down. I still see this inversion. So that's it. So 93 is the price target I'm just looking for on TLT, but right now we're at resistance on a trend line and we need to get above it. So it's not going to be easy. And again, big picture, I'm still a bond bear, but I see a resumption above potentially 93. But first we have to get to 93. All right. So we're above 200 day. That doesn't make me so impressed. We have to stay above this trend line. The 10-year is now into that 4.33. That is a lot of support right here. I will give it that. It's a lot of support. So careful on your bond bounce because you can see it. This is also trend line resistance. It's got to get above and stay above. So getting here was the easy part, quote unquote, but getting above, that's going to be tougher. If yields do drop, it's because of a macro reason. So think non-farm payrolls on Friday. If the JOLTS was weak, there are fewer jobs out there being listed. Maybe that follows up with jobless claims on Thursday morning or non-farm payrolls on Friday. I don't know, but it is definitely right here, right now, support. And then if it breaks 4.33, you can see the next level is kind of 50, which is 4.2. We've got JOLTS data out of the way and why bonds continue to hang in there. But right now, the 10-year is at the 200. I'm just looking for 4.2, not below, by the way. So I don't know what that's going to give us for a bond bounce and if or not, whether or not Thursday, Friday data is going to help in the matter. But mostly either on inflation data and FOMC next Wednesday. Fed and rates next week. They probably don't do a dang thing about hiking or cutting. They just give us the SEP, and maybe the SEP has 1 or 2 rate cuts in it for 2024. Nothing's going to happen exciting at the Fed meeting. It really will be the CPI potential drama that happens 8:30 on the morning of June 12th. So it's all going to happen before that that event. I have to show this because yields right now are making the weather. And before it was very bullish to have higher yields because money is making money and the wealth factor is strong, and that helps support spending and wage inflation and corporate profits and on and on and on. So if that weakens, that will start to potentially hurt those kind of cash producing assets. But on the other hand, it helps Main Street with credit card, interest rates and the rest. But mostly banks still are suffering terribly from unrealized treasury losses, which FDIC keeps bringing to our attention, are in the gazillions. But the point is they're protected. Fed and Treasury will have their back and say, hey, we got you. So we already had that March 2023 backstop. They'll come out again if they need to. They'll provide Treasury liquidity if they need to. So otherwise, it's not something to worry. Don't panic until we have a reason to. In the meantime, TLT has been forming this kind of, you can see this, right? It's moving lower, but at a slower rate of change. And it does have the potential to get and stay above for a little bit. And my little bit is just summer. So I'm still a big bond bear for all the macro reasons, but I can see a case for yields weakening and bonds strengthening this summer. I think it would be equity headwind. I don't think stocks and bonds would rise together. I think there'd be more of a rotation into bonds, and I think equities would just kind of peter out. You can also see this is yields, the 10-year and the German Bund. They are definitely coming back down. This is my oscillator, and basically this is just rate of change, and it's showing some weakness in yields, but nothing really dramatic. I just don't think it's a big like, oh, we're done. Just we have a pullback. This is funky, but I'm going to show it to you because I showed it to you once before and I'm tracking it. It's my Copic curve. I got a lot of stuff that I do with Copic curve, and it's a momentum indicator. This pink line has moved all the way back up to the 0 mark. And once we get above, that's going to be more bullish bonds. It could be very bullish bonds, in fact. But for right now, it's just made it back up to its equilibrium. And this is what I'm watching. Can we get both the pink and this moving indicator to get above? That'd be very bullish for bonds. But right now, all I'm saying is it's repaired, it's recovered in the same way that this little technical trend line on TLT shows that we've got some energy of repair. We're not crashing lower, and that's basically what I'm looking for, is a little bit more help in the bond trade.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.